Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, June 12th, 2021. And our top story today, we'll take a look at the new Delaware EARNS state-run retirement program. Well, joining me now to discuss this and a lot more is the Honorable Colleen Davis. She is the treasurer for the great state of Delaware. Colleen, great to see you. Thanks so much for joining us on the program this morning.
Thank you. I appreciate being with you.
So some great news, always great news out of Delaware, but in particular, great news as it becomes to retirement. A new program is under consideration to be rolled out for those Delawareans who work in the private sector but may not have access to a workplace retirement plan. What can you tell us?
Yeah, well, according to research from the National Compensation and Benefits Survey, we have nearly 54% of Delaware businesses that are not currently offering retirement benefits. And that equates to about 200,000 Delawareans who lack access to an employer-sponsored retirement plan option. And so this was a great way to get those benefits to those individuals without necessarily putting the burden on their employers.
Yeah, this is a momentous opportunity here. There are tens of millions of Americans around the United States who do not have access to these types of retirement plans. And we've seen, I think, similar initiatives in Vermont, another great state, Oregon, California, Illinois, Maryland. I don't want to leave anybody out. It's, not for lack of my memory. Look, it's not what it used to be. But what can you tell us in terms of next steps? My understanding is that this has unanimous approval within the Delaware State Legislature, I believe. What are some of the next steps?
Yeah, we have a pretty strong coalition of support. It's bipartisan. We've got really small business, large business, and employees alike are in support of this bill. And really, I think next steps are going to be getting to work and really hashing out the finer details of how we implement this. And again, I think that we'll be looking at some of those details, some of those features. We've looked at a significant amount of research that's been done by Vanguard and sort of industry standards. So it looks like what we'll look to achieve is something that's an auto enrollment, auto escalation. And again, a lot of that comes from the research that's been done by Vanguard that demonstrates that auto enrollment plans have a 92% participation rate compared to 61% of plans that are simply voluntary. And we look to really make the biggest bang for folks preparing for retirement.
Yeah, and they always say the states are the laboratories of democracy, and that's the case, I think, with these kind of unique retirement initiatives. I mean, I'm sure that in your research, you cited Vanguard study, but I'm sure you've talked to some of your peers across the nation in the aforementioned states that I mentioned previously.
Yeah, Delaware is actually one of only 5 states that has not started to craft or study this in some way, shape, or form. And so we really were a little bit late to the table. But I do think that we're going to have a big impact in this way. And you make a great point that we've had the benefit of so many other states studying this and preparing their own programs. And so, we've developed some great partnerships to really learn lessons from what's worked, what hasn't worked, what's the best way to get this rolled out. And I think at the same time, you mentioned what are the next steps. One of the things we are going to do is develop a board that's going to help us to implement some of these features of the plan. And so that means that we'll have key stakeholders that will not only take the research and the understanding and the knowledge from other states, but help us to craft it in a way that it's a meaningful plan for our state of Delaware.
And I should say, Colleen, I left out the Commonwealth of Virginia, please. I'm so sorry. When you start naming names, and you remember, you don't want to slight anybody. Let's talk about the time frame. Obviously, this is something that has to go through the legislative process. I think that ends June 30th. But let's just assume let's not assume anything. What is the ultimate timetable? Do you have an idea in mind in talking with the other members of the executive branch and the legislative branch of when the effective date of this plan might be?
Yeah, we actually built it into the bill itself. And some of the reason that we want to make sure that there's a bit of a runway in implementing this program is that we want to be most effective when we open the doors. We're getting folks prepared for retirement as quickly as possible. We want to be thoughtful and efficient. And at the same time, we're coming through a pandemic, and I think no one is immune to the impact of the pandemic in some way, shape, or form. It's really, we've all had to pivot. We've all had to adjust the way that we work. And I think in doing that, we don't want to overburden businesses. We want to sort of get them prepared and up to speed and ready to roll this out so that we're effective. So we do have a couple year runway before we are planning to fully implement the plan. And I think it's best for us to really be thinking about it in that way, just because we're going to see the most effective implementation of a program like this if we put a lot of thought and preparation into it.
Yeah, I mean, absolutely. I mean, the more time you have, the more runway you have, the better off your takeoff and, by the way, your landing can be. Just to use your analogy, I'm in a metaphoric mood today. I guess, kind of to pivot on your comment, employee benefits and having a retirement plan or having health benefits, that is a great incentive for employees to join a firm. And being able to offer these types of benefits, whether you're a smaller business who currently doesn't, by the way, have them today, is a great incentive to bring people into your company or organization and help them out, but also help yourself out.
Yeah, I love that point, Jeff, because, here in Delaware, we find actually, we've had a couple of studies done recently that demonstrate that so many of our Delaware graduates are taking up residence outside of Delaware. So we build up this talent here, and then we send folks off to places like Philadelphia, New York, Baltimore. And really what we want to start to focus on is retention of those young professionals and really kind of everybody across the board. So we're a great place. People sort of are very attracted to Delaware for retirement, for their retirement years, but we also want to sort of entice the younger generation to be setting up shop here and live, work, play. And I think that this is a really valuable way to entice some of our younger generation to set up shop here in Delaware, to not only be educated here, but to remain here. And I think our workforce is looking forward to that growth. Certainly our employers are looking forward to that potential honeypot that's going to, hopefully keep some of our younger folks here. So that's a great point.
Yeah. Well, Treasurer Davis, we're going to have to leave it there. Really appreciate you coming on the program. This is a great initiative. Wish you and the team at DST the best of luck, and we'll talk to you soon.
Thank you so much.
Thanks, Colleen. Great to see you. Thanks for sharing your perspective. And when we come back, we'll take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. On Monday, I sat down with the National Association of Realtors Chief Economist, Dr. Lawrence Yun, to learn the current state of the U.S. housing market. Let's take a look.
Back in March 2020, the early weeks and months of the pandemic, what a scare. The realtors across the country wondering, are we going to face another foreclosure crisis as we experienced about 13 years ago with that fresh memory in mind? But what do you know? Once the economy reopened, not only did the sales recover, but it went way beyond the pre-pandemic home sales activity. So strong surge of sales and with lack of inventory, it has kept pushing up the prices to a new high with each passing month. In any given year, you see some markets doing much better compared to other markets. But this time around, it is quite incredible that this is a broad base, nearly every market across the country, even markets where people would not have considered to be attractive, is getting interest from buyers. It could be work from home phenomena, which means that why stay in those expensive cities of San Francisco or New York if one does not have to go to downtown every day? So either it's a nearby metro area, the outlying suburbs, or even rural community, all seeing very hot market. But to specifically address your question, if I had to pick a region or two where it is super, super hot, I would say it is in the mountain time zone area. Whether it is Idaho, Utah, Arizona, the market is just super hot where home prices are rising essentially 20% above 1 year ago. The migration patterns before the pandemic was Northerners moving to Sunbelt states, just like your case of New York City to Charlotte, or say from New Jersey to Florida, or you see from people from say the Midwest going to Arizona or Texas. So that has been the trend before the pandemic. I think what has happened is simply it accelerated that trend. And now, people are considering with greater work from home flexibility. Remember, before the pandemic, it was only 5% of the workforce were working from home. During the lockdown, it was essentially about 40%, essentially the office workers who are able to work from home. Now it has come down a bit, but stabilizing at about quarter, 25%. So it's not going back down to 5%. Now, many companies, I think, will struggle about what is the right balance. Maybe some type of hybrid model, meaning come to work 2 or 3 days a week, but other time, work from home. So commuting becomes less important. And if that is the case, I think people will move away from downtown office centers into more distant locations. And for some people who are fortunate to be completely free agent, work from anywhere, I think they will seek out, say, many areas where there is zero state income tax, like Florida, Nevada, Tennessee, where they're getting strong interest. Always, mortgage rates are the lifeblood of the real estate. So when mortgage rate goes down, sales rises, and vice versa when mortgage rate goes up. So back in the late autumn, winter months, mortgage rate hit all-time low in America, 2.7% in a 30-year fixed rate mortgage. That's the average rate. Naturally, people with better credit history gets lower lower interest rates. But that was the average of 2.7%, all-time low. And that is one of the key reasons for the surge in home sales. Simply too good to give up. So not only did people refinance, but people are saying, you know what, why don't I get a larger size home? It may be more expensive, but the monthly payment actually could be lower thanks to the lower interest rate. So it played a tremendous important role. But now it is inching higher because we know that deficit financing, stimulus check, it is supporting the economy, but it's not free lunch. So a higher budget deficit means higher pressure on interest rate. So the mortgage rates are following that trend of slight uptick in rates at the moment.
And on Thursday, I sat down with entrepreneur and podcaster Jennifer Grimson to learn about building your own micro empires. Let's take a look.
Starting this next chapter in my life was coming to terms with the fact that I was going to have to share everything that had happened to me. So my story in a nutshell is that I lost everything twice. So no car, no job, no place to live, 2 kids to raise, and I was in Chapter 13 bankruptcy twice. And the second time it happened, I was 41 years old, and I just knew that I had to figure out what was happening, why I had allowed this to happen more than once. And I also knew that I had to find a way that this would never happen to me again. And that's what started. I didn't know where I was headed. I just knew I had to get back on my feet and start again. And that's something that I basically kept a secret for many, many years because there's so much shame tied to it. Shame that I'd gotten in that position, and shame how I was sort of digging my way out. So I had 2 kids, and I really didn't have a choice. I had to start over again, and I had to push through, and then sort of believing in myself and acting as if. So believing in myself, even when I truly didn't believe in myself. Sometimes I say to people, if you don't have the courage, then borrow it. So it's different from fake it till you make it. It's truly believing that I will have the courage someday. Maybe I don't believe that I can actually do this, but I'm going to tell myself that I can. And then living as if, kind of existing in a world in your mind that you can get there. I really didn't know where I was going to get, but I knew that it was better than where I was at that moment, especially the second time. And I knew I could rebuild. I knew that if all it took was hard work, that I was capable of hard work. But I just knew that there had to be another way than just getting a job and figuring it out again, just with a regular paycheck. So I felt like there were things for me to learn. And that if I could learn them, that surely I could create small pockets. That's why I call them micro empires, but small streams of income that would contribute so that if any one thing left, that I would not be completely out on the streets again. And I'm not a financial expert. I'm not a real estate mogul. I'm none of those things. I'm just a person who at the time just had a job and thought that if I, worked really hard. So how I learned those things was literally by being a learner. which I still am to this day, and I will be to the day I die. I joined an investment group, and that kind of changed everything. I joined specifically a real estate investment group. But when people think about real estate, they need to understand that real estate can be thousands of opportunities, and you may never actually own a piece of property, but still be involved in real estate in some way. So I loved the idea that I was surrounded by people who were speaking a language that I didn't understand at the time. I knew I wanted to learn that language, and I call it kind of getting in the right pool. I knew I was swimming in the right pool with Olympic swimmers all around me, and then I had my floaties on. But they were happy for me to be there, and they were happy to share. And that's the other thing too, finding a tribe, finding people who are willing, who know about abundance. They're accomplishing something and they're happy to share with you what you can accomplish. But in terms of using the tools, because you're right, I absolutely, when I talk about my story, the ability that I had, so the second time that I rebuilt and to wrap it all, that part up, I built to $1.4 million in income producing investments. I did that in just 4 years with a W-2 and some grit. What I learned along the way was that I could use an existing 401k as a tool. I could borrow against it. I had never heard of such a thing. I didn't know that that was a possibility for me. I learned about a self-directed IRA that I could pull out, put a 401k into a vehicle that could invest for me. I learned about manipulating my HSA. I learned about tax benefits of multifamily. And I'm constantly learning. It's never stopping. And some of these are considered, the tools of the wealthy, finger quotes. And it's not really fair because these are really tools that any of us can have access to, but we wouldn't necessarily know how to do it. So what I've learned by, having the show and having people call in and listeners, et cetera, is that the folks are usually ready and willing to do the work, but they need to know how. That different from everything that I've heard. Certainly myself, I believe that you put money in a 401k and you're just not allowed to touch it until you're 65. And that's all I thought it was. And like a good soldier, I put money in my 401k, but I had actually liquidated several prior to the second time of losing everything. So when I say I started over again, it's literally from zero.
And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow for BRN Sunday. I'll be joined by members of the media, academia, and financial services as we analyze all the news this week in so many different categories. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.